Kia ora, and welcome to the CoreLogic Property Market Update for June 2020. Well, here we are at level 1. Who would have thought? Almost as fast as we went into lockdown, it feels like we've jumped back to normal life pretty quickly too. Great to see live sport back on TV, and with big crowds as well. Something which was hard to imagine only a couple of weeks ago. And it looks like market activity is heading back to some sort of normality too, with agent appraisals, new listings and bank ordered valuations in June comparing favourably to previous years. In fact, new for sale listings for the last 3 weeks are tracking right in line with the average over the last 5 years. Such normality during a time that's anything but normal is actually comfortably reassuring. We're not seeing a flood of properties coming to market stressed, yet vendors aren't afraid to list their property for fear of uncertainty. The market has certainly not gone through unscathed though, as the Real Estate Institute's data for May has shown. Sales volumes in May remained well below previous years, but that's not surprising given we were at level 2 or 3 for the entire month, with physical distancing practices still in place throughout. When adjusting volumes for non-agent sales as well, we're reporting a drop of almost 44% nationwide compared to last year, with both Wellington and Christchurch experiencing slightly better bounce backs compared to the other main centres. With the drop in sales volumes, we need to be cautious of greater volatility in value measures, including house price indices. However, for the main centres, we can get a reasonable read of where things are at. And there is now no doubt property values have been impacted by COVID-19. According to the Ryan's House Price Index, nationwide values dropped by 0.5% in May and are 1.6% down over the last 3 months. That 3-month measure is a decent barometer of market performance for those areas with a large enough sample of sales in May, typically the main centres, comparing the relative prices paid in May to back in February, before any uncertainty really hit the market. And the downturn is evident across most parts. Values in Auckland have dropped 2.1% over the last 3 months, with the old Auckland City area seeing the greatest drop of 3.3%. Hamilton and Tauranga look to have held their value with a minor increase over the period of 0.7% each. However, the monthly drop of 1.8% in Tauranga indicates a softer underbelly to values there. Wellington City has seen the greatest drop of the main centres over the last 3 months, at negative 4.1%, which is somewhat of a surprising result considering we were expecting more resilience in the capital. Meanwhile, down south, Christchurch is down 2.1% and Dunedin down 3.5%. It's a remarkable turnaround in Dunedin, where strong pre-lockdown demand and limited supply was expected to provide some buoyancy for values. For now, I remain wary of the Queenstown figures due to still low sales volumes, only 33 in May, but indications are unsurprisingly weak. So, despite a higher than expected level of demand emerging out of lockdown level 4, price expectations and perhaps creditworthiness have dropped. Looking ahead, we may be getting towards seasonally normal values of agent appraisals, which will mean no major lift in listings throughout winter. There were signs of displaced autumn activity being pushed into the first couple of weeks of June, however it now looks like that has subsided. We will therefore have to wait until spring to see any noticeable lift in listings volumes. In the meantime, supply will remain short, which could limit value falls as long as there remains a steady stream of demand. From a macroeconomic perspective, the earlier than expected move to level 1 has meant some minor revisions in GDP forecasts, but we still need to be prepared for a significant reduction in economic output and concurrent lift in unemployment over the next few months, especially as the wage subsidies end for many businesses. Never a dull week goes by in the property market, so make sure you stay on top of it all by regularly visiting our research page at corelogic.co.nz. And for our weekly take on recent releases, be sure to subscribe to the CoreLogic Property Market Podcast in all good podcast players. Mā te wā.